Hey everyone, welcome back to our channel. If you're new here, please subscribe. I'd really love that. If you're returning, how you doing? What we're going to be talking about today is why. Why are big banks suddenly rushing to shut down so many local branches all over the nation? US banks are currently sitting on hundreds of billions of dollars in unrealized losses. When financial institutions get into trouble, they start getting really tight with their money and they are starting to cut costs. In addition to laying off workers, our banks have been cutting costs permanently, closing local branches. For example, between November 12th and November 18th, the sixth largest bank in the United States initiated filings to close 19 more local branches. America's sixth largest bank, PNC, has confirmed the closure of 19 more branches nationwide following a staggering 203 branch closures earlier this year. This decision, aligning with the bank's shift towards digital banking, is raising concerns among customers who prefer traditional banking methods. Scheduled for February 2024, the closures will primarily impact Pennsylvania, where the majority of branches marked for closure are located. However, several branches in other states, including Illinois, Texas, Alabama, New Jersey, Ohio, Florida, Indiana, will also be shutting their doors, leaving customers in these regions with limited access to in person banking services. During this same week, several other prominent banks made similar moves. JP Morgan Chase followed, closing with 18 filings, three in Ohio, two in Connecticut, South Carolina, and one in each 11 states, including New York, Illinois, Florida, and Massachusetts. So Citizens Bank came in third with 8 branch closures filings, 6 in New York, 1 in Massachusetts, Delaware, Minneapolis based U.S. Bank filed for 7 closures, 3 in Tennessee, 1 in Missouri, Wisconsin, Ohio, and Illinois. And Bank of America made 5 filings, 2 in New York, 1 each in Texas, Massachusetts, and California. Now, Citibank filed for 2 branch closures in Sterling, Bremer, and that's Bremer, First National Bank of Hughes Springs, Windsor, FS and LA, Aroostook County, FS and LA made 1 filing each. Now, altogether, these banks have filed to shut down 64 branches, one in just 1 week. U.S. banks decided to shut down a total of 64 branches, and this is just stunning. What we are witnessing right now is a tsunami of bank closures, and unfortunately, even more trouble is coming for our banks because of the real estate industry. It's a total mess right now. Existing home sales have fallen depressingly to low levels. We, you know, we are seeing that new home sales in the US have dropped about, it's almost 6%. It's like 5.6% or something like that just last month. Now, new home sales in the United States fell in October as typical mortgage rates reached their highest levels this year, and sales of newly constructed homes fell 5.6% in October for its seasonally adjusted annual rate of 679,000 from a revised rate of 719,000 in September. Prices for new homes are falling as well. So the median price of a new single family house sold in October fell by 3.1% from October to $409,300, the lowest since August of 2021. And that's down by 17.6% from a year ago, which had been the peak. And that's according to the Census Bureau. Now, the 3-month average is down by 12% from its peak in December of last year. And these are contract prices, and they do not include like the cost of the mortgage rate buy downs and other incentives like free upgrades, but they do reflect the lower price points. due to smaller footprints and the de-amenitizing. So meanwhile, the commercial real estate crisis just continues to intensify. Really, just check out, you know, Google numbers that were released. Um, the volume of CMBS loans that are classified as delinquent increased by 49 points, so almost like 50%, something like that, during 10 months from October to $27.91 billion. And that volume, it amounts to just over 5.0% of the $601.98 billion universe tracked that has been tracked. And in contrast, delinquencies at the end of last year amounted to just over 3% of the $616.15 billion. Wow. Imagine that kind of money. I mean, it's just absurd. I mean, it turns out that office buildings are the primary reason for delinquencies are rising at such an astounding pace. The driver of the increase was the office sector, with delinquency volumes over a 10-month period. There were a total of 199 loans with a balance of $9.59 billion. Imagine that. Imagine that. It's insane. The sector's prospects are likely to improve as office occupancy rates have declined in most of the country's major markets. And that's been driven by a substantial pullback in demand from office using tenants. So, like small businesses, law offices, whatever the case may be. So, all of this reminds me of what we saw in 2008. When the real estate industry falls on hard times, a financial crisis is usually right around the corner. But needless to say, it is not just US banks that are in trouble right now. Major banks all over the globe are getting hit really, really hard, and that includes Metro Bank in the UK. Metro Bank and their shareholders have backed a multi-million pound rescue deal aimed at securing the bank's future, and the vote was on a package that the bank agreed to last month to raise extra funds from investors and refinance debt. And Metro's share price had plunged in September following reports that it needed to raise cash to shore up its finances. So in the days ahead, we're going to hear a lot more about banks that need to shore up their finances. And it's inevitable, obviously, but that more banks are going to fail. And a number of people, that I get emails from, and even just friends and family, they ask, about, banks and stuff like that. And I've told them the same thing that I tell everyone. It is never wise to put all of your eggs in one basket. Anybody will tell you that. Anyone. We're moving into a period of time that is going to be extremely chaotic. Extremely chaotic. So I want you to prepare yourselves for that. So you don't want to have all of your assets in one single place. What we have seen so far is just the beginning. Our banks are going to get into even deeper trouble during the days ahead. And that's really bad news for all of us. It really, truly is. Okay. So know what you're getting into. Don't put all of your eggs in a basket. Head on a swivel. Keep an eye on your finances. All right. All right, guys, I'm out of here. I'll see you in the next one. You stay positive. You keep prepping. And as always, fear less. Ciao.